Good morning, everyone. Everybody's rested up from the weekend, had a good time. And good morning, good morning. So looks like another attempt at a counter trend rally. And, as I went through the charts over the weekend and doing the letters, and it was like, I even wrote this as like, I just can't find anything positive here to hang a reversal on, or something of some significance anyway. So maybe that in of itself is a sign of a low setting up. So the question is today going to be that day that at least we get one day of some type of a meaningful reversal that could start some type of a move higher? So obviously the answer to that question is we'll see the later in the day to see whether prices can hold up here. Good morning. So we've got a decent sized day already. These are the S&P futures. And you can see they've only rallied up into resistance. So this is where the sellers are. There's no doubt. And so are there enough sellers here to knock it back down, or are there enough buyers to hold up here? What we do as pattern traders is wait to see what develops here, meaning does it M top? Does it drop again? Does it go sideways, absorbing the supply, forming patterns that suggest prices could go higher? So this move up right now has created a void underneath. And we've got our first real sign here of potentially holding this area. It's real early, but when we see prices try to dip down into the void, right, for the void is a sign of strength, or I should say the creation of a void is a sign of strength, whether it's to the downside, right? Strength to the downside. So a void begins with an extreme move in one direction or the other. And so currently it's to the upside. And when that happens, there's no congestion. There's just such an enormous force of buying that overcomes whatever supply there is. It doesn't stall. It goes straight up. And that's exactly what happened. So now that strength is supposed to continue, and it's supposed to form price patterns that are in alignment with what preceded it, the strong move. And we do have the beginnings of that. So once it hits that resistance area, it's going to back off from it. So if it's truly strong, it's not going to back off very much, and it begins to create some support, and a bottoming tail bar is a good sign. And so why I don't have this on candles, because I can just display more data with a bar chart here. The bottoming tail bar tells me that buyers stepped up on this initial dip. So it's a start. It doesn't mean go long. We need more information. By 9:30, this could be down here. And so once you get the bottoming tail bar, the next question in our analysis is, can prices take out the high of the bottoming tail bar? From there, what's the next reference point of resistance? George saying void is a magnet. It is, and it, George, true. But if demand in this case is strong enough, the magnet isn't going to be able to pull it down. And that's what we're trying to figure out right now, whether the magnet, as you say, is going to pull it in, or whether demand is going to be able to fight that and hold it up here. So in the step-by-step, bar-by-bar approach is to recognize what's happening, see individual candles that begin to form, and the bar prior to the bottoming tail bar was a topping tail bar. It took out the high, and it closed down near the low. And then it went down and it popped right back up again. So the indecision as to who's going to stay in control or lose control between buyers and sellers is developing here. We should just stand aside until we get more information from within this time frame. So we're looking for the clues that buyers continue to step up here. From a daily chart perspective, we have a situation here where prices had a strong rally up, and this, was the S&Ps went all the way up here Other markets didn't have that strong of a rally, but now it's gone all the way back down into the area where it turned. So if we are to get a day that closes like this, or maybe even a little bit of a bigger day, that's a long signal, but we know it's against the trend. So it's not, some fantastic setup here because of the depth of retracement here. Nonetheless, it's a setup in which it says, hey, go long or sell, put credit spreads below this area with the assumption that this low is going to hold here. So those trading vehicles are a choice as to which one you want to utilize. If it chops around over here, doesn't go up very much, you get to make the money with the put spread. And you don't make much money trading directionally long. If it rips higher like this, the put spread income is going to look like crumbs compared to this move, if that's what happens here. But notice this move down and this move down are very different. You should be able to see the difference, or it should pop out at you. Whereas this move down was a vertical move down. And while there's some tails, if you look at the candle bodies, it was just a straight move to the downside with no congestion, where this one made an attempt to hold on that strong move up and on the pull back, and then it failed. That was a big Thursday reversal day that failed. So we've got this mess up above here, which would suggest this is not going up like that. So we make assumptions as to the probability of prices moving in a certain manner based on what preceded it. Is there congestion? Is there a void? Is there support to the left? Is there breakdown failures? And this could be a little mini poke to the downside here. Friday, where it attempted to go up and then buyers decided to leave for the weekend. But now we've got this bar to see if it holds on to. So from a daily chart perspective, you really have nothing to do here unless you want to assume that's going to hold. Maybe by midday, we'll see. But right now, this could turn into a topping tail. And as we look at the weekly time frames, right, that we do need to see this turn around down here. That would be, the ideal to have a turnaround here. I would have preferred this break below last week's low and then do it. Maybe that's in the cards. We'll see. We'll see. Is looking at the spiders, this kind of a move down and retest, it can make a higher low. I prefer, and we spoke about this toward the end of last week. We talked about W bottoms here in the room, and that sometimes they do set up with a higher low, which isn't the ideal, and it can work out. So we just have to see on the daily chart how this develops. But the ideal price pattern historically is for this to move down here and then turn around. So we'll be watching for that. Now the Qs, that's no W bottom type of pattern. It's more of, hey, this could be a measured move lower and this thing could come down here. So that's something else we're going to have to keep an eye on. But we've got these different reference points of price support over here to the left, and we could get an out of the ordinary type of a pattern that begins to reverse. Nonetheless, this is trending down on the weekly time frame. It's coming into multiple areas of congestion, so it makes sense for there to be some stabilization somewhere in here. And so, on the daily chart, we just have to see what begins to develop. And this is a good start of a turn, this gap up, which is just barely cleared Thursday's high, which is what I wrote about as one of the scenarios in the advisory letter. If by chance, I had to force myself to write a bullish scenario, and I wrote that, and there's nothing positive here, but I have to write a bullish scenario because there's a possibility. And this was one of them, gapping to or above this high. And that's what we have happening in the Qs here. And let's just NASDAQ. And you see the beginning of a turn. It's in the support. It just cleared the high there. And we have a similar hourly time frame that's chopping its way down. and it's attempting to hold here. So we'll see how this plays out. The Russell is more of your, especially on the weekly time frame, your typical textbook W type of bottom. Big move down into support, big reversal. And this week, we'll see if we get the reversal week here, and that would suggest a counter trend move if we were to get a positive week. We've got a bunch of days here before we're going to know that. And where are they here? Gapping up above those highs. It's a good start. It's got a little bit of a void above, right, into this congestion here. Let's see if it can hold on. Now, the transports are a bit of a concern, you know, that, well, and they broke down, but they didn't continue to go down after that. So this was the break in other indices, and then it went sideways. It actually reclaimed the top, or just barely reclaimed the top of that red bar there by poking above it. So these transports here, we got to keep an eye on whether they continue to show a little bit of relative strength that they are and can push up here. But I'm telling you, set an alert down here, because you don't, most of the time we don't watch the transports intraday, but set an alert, because if they go down there, let the computer watch it. And if the alarm goes off, it's a heads up that, hey, this is not what's supposed to happen if we're going to get, you know, a turnaround day today or into this week if they break down. Dow obviously looked terrible, gapping down. It tried to turn, but it's, you know, shortened trading day, and the buyers went away and it turned into a topping tail. But same scenario where it's into the support, and the Dow had showed relative strength by pushing well above the October high. Now it's fallen all the way back down again. So we'll see if this turns, and let's look at the futures to get a better view of what's going on there. Now, again, not too an impressive turn, but let's see if it's the start of a turn here, if it can hold on. This is even further below the congestion over there to the left than what we saw in the other markets, but similar, you know, up and choppy little flag, bullish flag type of a pattern and a bottoming tail bar. We'll see if this can move up here. What's going to bring buyers in here? Well, end of the year. We're saying cyber sales are doing great, some optimism there, but what happened with, you know, China trade wars and all of that, you know? So this market is one in which here we're fed a little bit of positive information and positive price action, then to be slapped back down in the other direction with some negative news that kind of all of a sudden reemerges its head again. So that Mr. Schizo market that I've talked about all year, you know, we have to just play it as it comes, and we'll see if this can hold on here. And we do get some type of a decent reversal by the end of the week for at least longer term plays. We'll see. Bonds showing a little bit of weakness, makes sense. Equity markets are showing a little bit of strength. They can often go in opposite directions. Oil recovering a little bit. You know, it's been crushed enough here, maybe. There really isn't significant support here. You know, in reality, it's way down here. And, well, you've got this little shelf here, but I would think, you know, the big buyers, you know, any buyers really just want the best possible, highest probability setup that you can get. And that is on a collapse into an area of price support. So we'll see if it can get there or not. But it's a stabilization day, and we'll see what brings here. Gold, just slopping around here. And, you know, it's still kind of trying to build a base here, and we don't know what it's going to do. Pretty sloppy type of price action. And other than that, I will hand it over to Mr. Dan Gibby to review gappers and whatever open trades.
All righty. Good morning, everyone. Thanks. Yep, great review and summary of our game plan today. Couldn't say it any better. We're just gonna wait and see what, we're gapping the resistance. And let's see, in the first hour, if it holds. I sent out a text alert to our weekly folks saying that I'm gonna be looking to sell puts today that expire today if it holds. And then into the close, I'll consider doing the same thing, a put spread for Wednesday. And then as we get more confidence, if this is a short-term hold, then I'll start looking at put spreads for Friday on index ETFs and stocks of interest. And then as Greg said, you could depict your level of bullishness. Long stock is the most bullish. Put spread, different risk to reward characteristics. And we do that based upon how aggressive we are. All right, let's look at our opens first. CRE, we have a covered call. Cold, I never trigger, but I'm still keeping an eye on it. Moss, covered call. Team, no, we aren't in team. UAL, we sold put spread. And, you look at it now, the market was questionable and this thing was incredible relative strength. So should we have bought that also? Well, I don't know. Our Amazon put spread for last Friday held on, just barely into the close, but that's the old melting ice cube. The finish line was $1,500 short strike, and this was just a couple hour trade. That was definitely not a swing pattern. A few I'm looking at today, this AMD looks great over, now I'm always wanting to say Thursday's high because that's 2 days ago, but obviously Thursday we didn't trade, so that's Wednesday's high. I'll just say the red bar, make it easy. AMAT, I'm watching for put spread. UNG, we're watching for a bear call credit spread. And I did a video for the weekly options traders on, the lessons learned from that optionsellers.com. He says he blew up because of a rogue wave. And I mean, sure, it's a big move, particularly if you're in hope mode, not adjusting your positions or using too big a share size. But there's no rogue, like 1998 Russian ruble default. There's no long-term capital management gap down. There's no Black Monday. I don't get that. But that also forced me to look at this and say, well, if you use technical analysis, our strategy, master trader approach, now is the time to do it. Not being a deer in the headlights here saying, well, it's extended, so I'm just gonna, keep sitting in my shorts until you get blown up and you get a margin call and you're forced to liquidate. All right, enough of that. FL, keeping an eye on that. It's a bullish gap. CCL broke out also on Friday as a 1, 2, 3. Leg, I'm still watching to see if it can get out of here, out of this base with conviction. HTA, and we kind of missed it. Okay, so let's look at a couple of these. Look at this little guy. It looks like a penny stock. It's up double. That's not my style. The old TTD, breaking out on a 15-minute chart, 122.80. It's still a total mess in a trading range, but Look at this, bottom, bottom, bottom. Look at all these tails on the weekly. Tails are buyers, demand. So this is a put spread candidate for me. PLT gapping down in a strong opening market. So that's relative weakness, gapping under 48. You know, it's kind of getting oversold, but it, you know, we'll be looking on the gap up. When I pull up telechart, I'll be looking for weak things, not strong things, because everything, well, the majority should be strong. Sure, we are going to be looking to go long, but I'm also going to build a list for short. JKS, this was right out of our MT live on Wednesday. Intelligent bottoming patterns, right? Big move off the low, huge. Look, sliced through resistance, went up to the 50, sliced through the 20. Higher low, no follow through to this red bar. Bottoming tail. Now it's gapping up to 1040. I got my higher bottoming tails on the weekly. Still in a downtrend though. But remember, the subject was intelligent entries. So I'm going to put that in a thumbnail. It looks good. And it had earnings this morning. IGCC. Oh, I read about this one in Barron's, had an article about this marijuana stock. And this Wednesday's MT Live is on trading climactic buy and sell setups. So I took a snapshot of this climactic sell setup with all the marijuana stocks. Look at this, 14 bucks down to 66 cents. Oh, Greg, yeah, and everybody else I meant to add, I also read in Barron's that two big potential market moving events this week is Fed Chairman Powell's going to be speaking at New York breakfast, economic, whatever. So people are going to be looking for clues on interest rates. Barron said, yeah, there's about a 76% chance of another rate hike as expected in December. But he said the futures markets on interest rates are totally not agreeing with the three rate raises increases for next year. So that, you know, that's a sign of the bond market saying, no, we don't agree with the Fed. So we could get a big relief rally if Powell starts giving confirmation of that view. Number two is Trump is meeting China's president in Barcelona at the G20 summit this Friday. And Greg mentioned it in the video and even pre-market, the trade wars, it depending on how bad it gets, it will affect the economy. That's a mathematical certainty. You're putting a 25% tax on all these goods that we need. I also read over in France, they're rioting over there because the president is